Well, let's get talking now. Mr. Ambrose Omodion is Chief Research Officer in Investor Consulting Limited. He joins me live here in the studio. Thank you for joining us, Ambrose Omodion. We appreciate your time.
Thanks for having me.
I'm sure by now you are smiling, perhaps because you've been on this show many times, and we'll look at how what was the expectations of investors in the equities market ahead of the MPC meeting. Now, the MPC meeting is gone, I would say. But let's start. Are we beginning to see the impact of that decision in the market, given the performance of the equities market on Tuesday?
Yeah, actually, it's a reflection of the outcome of the decision of the committee voting to hike rate with almost 150 points in a stretch. I'll tell you, this has really kind of hit many investors in the market, because naturally it is CBN or monetary that set the tone of interest, and when it is high, the advanced funds are bound to leave equity market to the fixed income market and all those treasury and all that. But for me, I would say that the MPC committee just sacrifice economic growth on the altar of attracting foreign investors, at the same time managing the money bag policy system in Nigeria, because they are thinking that because of the being pre-election year, yes, we have seen how much have been used for many Nigerians that are interested in most of the position politically used to buy the form alone. Almost more than almost 30 billion has come out from somewhere just because to get a form to participate. That means we expect this form liquidity to be. That is why personally I was thinking that it's too early for for the committee to vote for rate increase, because one, the economic recovery is still very fragile. Then if you are not sacrificing the economic recovery that you'll be preaching, that is where you want to normalize the supply and all those, because already what is happening in the economy is not because you have too much liquidity that is causing inflation. Inflation is cost push inflation because of high cost of energy and all those stuff. Now, if you are also increasing cost of fund, automatically you are open door for people to lose their job, because layout, many companies that cannot afford to take all this will start laying off, and that will not contribute to water. And at the same time, so you look at what state of the economy are we now. If you look at the recent GDP figure that was released for first quarter, we saw a decline. Your productivity as a nation is declining. Your interest rate is on the increase. Your inflation is on the increase. What are you trying to achieve? That's why I said at this stage of the economy, I'll say in economy we have almost 5 phases of the economy. We have the early expansion, mid expansion, and late expansion. We have the early contraction and late contraction. As we speak now, with what we saw yesterday, the increment, or the hike in the rate and the interest rate, inflation looking up, and the productivity from the GDP declining, we're already entering the light stage of expansion. That means at this stage, it is this stage of the investor where they should look at, because I tell you that in any situation there is always opportunity.
So as to play safe.
Yes, always opportunity for you to make money. Now that we are seeing inflation is on the rise, and the interest rate also in that direction. Productivity in terms of GDP is already down, because your industrial output or national output is down. Because look at the GDP for Q1, we have a decline of about 0.87 point down from Q4 about 3.98 to 3.11. That means you can see if you are kind of sacrificing the economic growth and recovering, because if you really want to engage people, your economy will be doing well, business activities will also that as a business expand, engage more people, that will also help you to also fight insecurity. But now on the altar of attracting a foreign investor, and also there's another good way, good opportunity in that angle. But at this time, I believe that we should wait to see the outcome of the primaries, and then in the second half of the year. But now moving from just a whole 150 points for me is it's so high. And also, if you want to trade the part of the global central bank that are really increasing rate, none of them has increased rate with 100 points. Highest was 50 points. 25, 20. I was thinking that
especially the likes of the US, 50, which did this at 50 basis points.
Yeah, if we have increased our own at 25 points, to watch and see, because as we speak now, yes, the only thing that will kind of save most of the sector is that at the meeting they said those critical sectors that have intervened will still enjoy 5% interest rate till 2023 March. And that is why also investors in the market should also look at this information that you also use to guide you.
But can we look at this good side? Yes, the interest rate for some critical sectors like agric, of course, is been tapered to single-digit rates. Yeah. But can we capitalize and explore that area to buttress or augment the shortfall on the other side, given the fact that they are trying to sacrifice economic growth to the interests of foreign portfolios?
Well, if you look at the NPR, that dictates where foreign flow to. The one you have done is for that intervention you have done. This like I call it at the back, you are trying to make the economy work, but with the NPR, that is where every interest in Nigeria should tie to. Anything that means, now banks will be smiling, no matter how, because this also will help bank. The treasury people will look up. Their interest, net interest income will look up, and all those stuff. But I believe that in any institution there is opportunity in the market. That's why I said investors in the market should not panic. This is what we're seeing now, just panic for the announcement and all those stuff. But I believe before now on Friday to normalize, because there's still opportunity. Because if at the end of the day, for me, inflation will come and will cross 17 or almost to 18, again, all those fixed income instruments already are already in real negative return. When I mean that negative return already for them. Or if it also increase to 18, it's a threat. Right. But in equity, there are some stocks or some companies you can use to hedge inflation, because those companies are also successfully push their price to the consumers, and that will impact the earnings. But if you look at, for me, I believe that is what investors should look at. Don't allow the hike to push out of a position. But if you are in profit, I will say you should not cash your profit out. But if you're in a position, just wait, not just selling and coming back, because I believe that with time it will normalize. The big players in the market, which are the PFAs or fund managers and those stuff, they also know how to adjust their position, because they know that even with the 150 point increase, if inflation also moves to 18, it has also kind of water the increment, because your real return is already in negative. As inflation goes up, your real return is in negative. For that, you need to find a balance in your portfolio.
But if the inflation goes up, for instance, let's say for next month,
not for instance, we are seeing there, because the way you've increased your interest rate, expect that energy it will also go in that direction. And now that there will be what kind of cost of phone has increased, it's also going to come and push the price of goods up.
I know you talked about, investors will have to look for a way to play safe in the market. Yeah. If you look at yesterday, all the sectors, almost all the major sectors, from consumer goods to insurance, all of them are running southward at the moment. So I'm just wondering, where exactly will investor play safe at this time, given the fact that from industrial goods to consumer goods, oil and banking, they are all running southward?
Yeah, as to speak, the announcement was made yesterday. It's expected that there will be reaction, sell-off, but then even today, this morning, we expect that. But I tell you, between now and Friday, analysis will come. The PFAs will analyze, what will be the impact on the long run. Then, if inflation, also tick up as we expect, naturally it's going to touch around 1750 or 1780. If it happen for the month of May, then what will be these are the things you want to look at. Yes, which sector, like I always that. This time, you are not just to invest for investing. Right. You look for what we call commodity-backed stocks or assets that you know that, this company are into this, and because of this, these are where you should, because at the end of the day, if they are making money, because I tell you, on the short run and long run, it is earnings of a company that impact price.
Well, it's earnings of a company that impact price. Let's look at some of the top gainers for Tuesday's trading session. Japan Gold is one of them, with about 3 kobo. That's about 10% there. You have the Academy, you have MRS, and you have a quite number of them as well. You also have some microfinance bank in that category there. So do we expect this trend to continue, given the fact that market is experiencing, a bearish moment at the moment?
Actually, as you just said, market are pulled back for 3 days, and also the high momentum yesterday that market lost about 1.82. Today, I see that mood will still be in the market, but on a reduced magnitude for me. It was not as high as what we saw yesterday, because now investors were looking at where can I place the another stock. But I believe that yes, market will react between now, as I said earlier, till Friday. All this news will be normalized. Analysis coming here, then different view. Yes, another thing, when you increase the interest rate, yes, they're about to encourage savings, which also go to investment. But on this, look at what is happening in the economy. Does the increase in rate impact economy positively? If your effort is to make sure that the economy is expanding, with this, high cost of interest, automatically cost of fund has increased. At the same time, people want to also reduce the cost, because if they're able to make profit that will cover the cost, they start folding down their business. In the process, people also will leave their job. For me, I think let's see how the CBN. I know that they are thinking, they are trying to manage, the money bag policies you have here, because of liquidity will come from election, also to attract foreign investors. But I tell you, because being pre-election year, I see no foreign investor coming direct to Nigeria now. They want to see the outcome of the election, with what's happening in Ukraine. And also, if you look at the mature economy, you can see that the fixed income market is becoming attractive for them. They can't come here and take risks investing in equity in Nigeria, knowing that even when they are going as a problem because of our foreign exchange management style. For me, that if you are using the increments to entice foreign investors, I tell you, they are not coming.
But can we depend on the domestic players to perhaps become more active in this market? Perhaps that will, of course, cushion the effect or impact of this inflation, I beg your pardon, interest rate in the market.
Like I just said, I said the increment in interest rate will help also to encourage savings and come to investment. We agree, but how many people are really investing? Have you done enough education to educate Nigerians on how to invest in equity market, even in the bond market? Elsewhere, we need a financial inclusion. You need to go beyond either on the just talking. Are you meeting those informal people? How do they know to invest? Because if they know, they'll be going to other policy scheme or any other scheme to invest. If you understand that how this market can help them to grow their wealth, they will come here, but you need to understand it first. I will tell you that if you want to educate the man on the street how to invest in equity, but it's not the same pattern you use to educate, to teach somebody that has been CIS that want to work in a stockbroking firm. And that means you should have a model. Even the regulators should know that it's not just being on the Zoom to teach people. Are they getting it? How can you get in touch with them? What language do they use to reach them? These are the things we should do so that we can employ, engage more people to participate in equity in the stock market or in the financial world.
Give us your live chart, perhaps the direction for the market for today. For instance, Guinness was in the red with about 9 naira 80 kobo lost yesterday. Global Spectrum was also in the red as well. We've seen that that stock on the Guinness chart in recent time, but back in the red yesterday. You have Mansard, Charm, Very Capital also in the red yesterday. So what is likely to happen? Take us through the technical analysis for today.
For me, for the market, let's start from the general market. If you look at the general market, I will tell you that the chart is saying the market is still on still bleeding as we speak now. If you look at the chart now, you can see this black pullback. Market has come below the T line, which I tell you that T line is a very strong line. Once market is below T line, it tells you that market has confirmed another decline stage. That means market have entered the decline phase of the market. Like we tell you that market has a 4 phase: the accumulation phase, markup phase, distribution, and decline. Now the market is in decline. For you as an investor, you need to wait to see where the market will form a strong support level. You cannot jump in. But market is still pulling back. You can see the black candlestick here. Blue one, this is really a bear situation yesterday, and it has lasted for 3 days. You can see, and also market has tested this as high as 53, 7 or something before pulling back, and market is already below 52,000 mark. For me, it's a time for investors to be very careful because market is already correcting, pulling back. Wait to see a strong support level before you can jump in. But use this opportunity also to take advantage of the market. If you're in profit, sell off now and wait to find a good entry. As you just said, let's look at what happened in Guinness. Look at Guinness start yesterday. You also in a red situation, pull back, profit taking hit the stock, lost almost 10%. And this is a stock that have rallied to push. If you can see the candle, you can see the height of appreciation. For me, it's not bad that people are taking profit, but you that want to trade the stock, watch also exactly where will be the right place for you to jump in, because after that you don't catch a fallen knife because it will wound you. Wait for the knife to land first before you take position. That means now the market is pulling back, wait for the market to find a support level, and then you cannot jump in.
Well, I think we'll just have to, leave it there. Thank you so much, Ambrose Omodion, Chief Research Officer, Investor Consulting Limited. Well, thank you for coming on Business Breakfast.
Thanks for having me.